In this video, we will discuss why China's economy is not going to collapse. The Chinese economy has been the subject of much discussion and debate in recent years. Some experts have predicted that the country's economic growth is unsustainable and that a collapse is imminent. This video is divided into 10 parts. China's spectacular growth, history of U.S.-China trade relations, impact of U.S.-China trade war, demographic issues, government blunders, zero COVID policy, and an attack on China's tech sector. Why China won't collapse despite these issues. Made in China policy, investments and innovation in green energy, catching up in the semiconductor war. 1. China's spectacular growth. Over the past few decades, China has experienced one of the most remarkable economic transformations in history. From a largely agrarian economy to a global economic powerhouse, China's rise has been nothing short of spectacular. Firstly, exports have played a critical role in China's economic growth. With a large and relatively low-cost labor force, China has become a leading exporter of manufactured goods, ranging from textiles and electronics to steel and machinery. The country's exports have helped to fuel its economic growth by generating a large influx of foreign currency and attracting foreign investment. In addition, China has implemented policies to support its exporters, such as currency controls and tax incentives, which have helped to make its goods more competitive on the global market. Secondly, China's infrastructure boom has been another key driver of its economic growth. Over the past few decades, the country has invested heavily in building new infrastructure, including highways, railways, airports, and seaports. This has helped to connect China's vast and diverse regions, facilitate the movement of goods and people, and support the growth of new industries. The infrastructure boom has also created jobs and driven demand for raw materials, such as steel and concrete. Thirdly, China's government has played a pivotal role in promoting economic growth. The government has implemented a range of policies aimed at promoting investment, supporting small and medium-sized enterprises, and encouraging innovation. In addition, the government has taken an active role in managing the country's economy, with measures to control inflation, regulate the financial sector, and support sustainable growth. 2. History of U.S.-China trade relations and the role of the United States in China's economic growth. The role of the United States in China's growth has been significant. In the early 2000s, the U.S. was China's largest trading partner, and the two countries had a highly complementary economic relationship. China was the world's factory, exporting low-cost goods to the U.S., while the U.S. was the world's largest consumer, importing goods from China. This mutually beneficial trade relationship helped to fuel China's economic growth, and it was a key factor in the country's rise to global economic dominance. However, as China's economy grew, tensions began to emerge between the U.S. and China. The U.S. became concerned about the trade deficit with China and the loss of manufacturing jobs to China. In addition, the U.S. began to view China as a strategic competitor rather than a partner. This shift in attitude was reflected in U.S. policies, such as the imposition of tariffs on Chinese goods and the restrictions on Chinese investment in the U.S. Despite these tensions, the U.S. has continued to play a significant role in China's growth. U.S. companies have been among the largest investors in China, and they have played a critical role in the development of China's tech sector. U.S. companies such as Apple, Microsoft, and Intel have established research and development centers in China, and they have helped to drive innovation and growth in the country's tech industry. In addition, the U.S. has been an important source of capital for China. China has relied heavily on foreign investment to fund its infrastructure projects and to support its economic growth. The U.S. has been a major source of this investment, accounting for a significant share of the foreign direct investment in China. The U.S.-China trade war began in 2018 when the U.S. imposed tariffs on Chinese goods in an effort to reduce the trade deficit between the two countries. The Chinese government responded with retaliatory tariffs on U.S. goods. The trade war has had a significant impact on both countries, with the U.S. experiencing job losses in certain industries and China experiencing a slowdown in economic growth. But I do not believe the tense relations between the United States and China are going to collapse China's economy. Because firstly, it is important to understand that China's economy is not solely reliant on exports. While exports do play a significant role in the country's economy, China has been actively working to shift its focus towards domestic consumption in recent years. This has been reflected in the government's policies, which have included measures to boost consumer spending and increase wages. As a result, domestic consumption has become an increasingly important driver of economic growth in China. Secondly, China's economy is highly diversified. The country has a thriving tech sector, which has been growing rapidly in recent years. Additionally, China has a large and growing middle class, which is increasingly driving demand for high-quality goods and services. These factors have helped to create a more balanced and sustainable economy, which is less susceptible to external shocks. Demographic issues. This now leads to concerns with the domestic market. China's decreasing population is a major concern for the country's economy. The country's one-child policy, which was in place from 1979 to 2015, has led to a rapidly aging population and a decline in the number of young people entering the workforce. This has put pressure on the country's social welfare system, as there are fewer workers supporting a growing number of retirees. One of the main impacts of a decreasing population is a decline in economic growth. With fewer workers, there are fewer people contributing to the country's economic output. This can lead to a decline in productivity and a slowdown in economic growth. In addition, a declining population can lead to a decline in consumer demand, as there are fewer people buying goods and services. Another impact of a decreasing population is a shortage of skilled labor. As the population ages, there may be a shortage of workers with the necessary skills to fill certain jobs. This can lead to a decline in innovation and productivity, as companies struggle to find workers with the skills they need. To address these challenges, the Chinese government has implemented a range of policies aimed at encouraging population growth. These policies have included measures to encourage couples to have more children, such as offering tax incentives and expanding maternity leave. The government has also implemented measures to support the elderly, such as increasing social welfare spending and expanding healthcare coverage. In conclusion, China's decreasing population is a major challenge for the country's economy. While the government has implemented policies aimed at addressing this issue, it remains to be seen that these measures are not effective in reversing the decline in population growth. But the good news is, economies can still grow with a decreasing population due to advancements in technology and productivity. As technology advances, it can enable workers to be more productive, which can lead to increased output and economic growth. In addition, automation can also help to offset the decline in the working-age population by reducing the need for human labor. Another factor that can contribute to economic growth in a declining population is innovation. As companies face labor shortages, they may be motivated to invest in research and development to find new ways to increase efficiency and productivity. Furthermore, economies can continue to grow by increasing their focus on the service sector. As populations age, there may be an increased demand for services such as healthcare, education, and leisure activities. This can lead to growth in these sectors, which can contribute to overall economic growth. So I do not believe demographics will lead to collapse of Chinese economy either. Policy blunders by the Chinese government. In regards to the zero-COVID policy, the Chinese Communist Party's approach has been criticized for being too extreme and heavy-handed. While the policy has helped to control the spread of the virus within China, it has also had significant economic consequences. The strict lockdowns and travel restrictions have led to disruptions in supply chains and reduced consumer spending, which has had a negative impact on businesses and the economy as a whole. In addition, the Chinese Communist Party's regulations on the real estate sector have also been criticized for being overly aggressive. The regulations, which aim to address concerns about housing affordability and speculative investment, have led to a sharp decline in real estate investment in many cities. This has had a negative impact on the real estate industry, which is a key driver of the Chinese economy. Finally, the Chinese Communist Party's recent crackdown on the tech sector has also raised concerns about the impact on the economy. The party's actions, which have included investigations into tech companies and new regulations on data privacy and security, have created uncertainty and led to a decline in investor confidence. This has had a negative impact on the tech industry, which is a key driver of innovation and growth in the Chinese economy. In conclusion, the Chinese Communist Party's recent economic policy blunders have had significant consequences for the economy. While the party's policies have been aimed at addressing important issues, such as the spread of COVID-19 and concerns about housing affordability and data security, they have also had unintended consequences. Again, I don't think any of those things are going to be an issue for China because the government has been easing on those policies. The Chinese government repealed zero-COVID policy, eased in real estate and tech sector to revive its declining domestic investment and consumption. Now let's look at the reasons why China's economy is going to thrive in the upcoming decades. Made in China policy. The Made in China policy, also known as the China Manufacturing 2025 Plan, is an ambitious government initiative aimed at transforming China into a world leader in high-tech manufacturing. The plan was launched in 2015 and is focused on developing key industries such as robotics, aerospace, and biopharmaceuticals. The policy has several goals, including reducing China's reliance on foreign technology and increasing the proportion of domestically produced high-tech products. The government has invested heavily in research and development, as well as in infrastructure such as high-speed rail and airports, to support the growth of these industries. One of the key challenges facing the Made in China policy is the need for China to move up the value chain in manufacturing. In the past, China has been known primarily as a low-cost manufacturer of basic goods such as textiles and electronics. However, the government hopes to change this by focusing on high-tech manufacturing and innovation. While the Made in China policy has been successful in some areas, such as robotics and electric vehicles, it has also faced criticism from other countries. Some critics argue that the policy unfairly favors Chinese companies and puts foreign companies at a disadvantage. In addition, concerns have been raised about the policy's potential impact on global competition and intellectual property rights. In conclusion, the Made in China policy is a key part of China's economic strategy and has the potential to transform the country's manufacturing sector. However, the policy also faces significant challenges and has raised concerns about its potential impact on global competition. China's edge in green and sustainable energy. China has made significant strides in recent years towards sustainable energy, particularly in the areas of renewable energy and electric vehicles. The country is the world's largest producer of solar panels and wind turbines, and it has set ambitious targets for increasing the use of renewable energy in its energy mix. One of the key drivers of China's success in sustainable energy has been government support. The Chinese government has implemented a range of policies aimed at promoting the use of renewable energy, such as subsidies for renewable energy projects, tax incentives for companies that invest in renewable energy, and regulations requiring utilities to purchase a certain percentage of their energy from renewable sources. In addition to its focus on renewable energy, China has also made significant investments in electric vehicles. The country is the world's largest market for electric vehicles, and it has set ambitious targets for increasing the number of electric vehicles on the road. To support this goal, the government has implemented policies such as subsidies for electric vehicle purchases and regulations requiring automakers to produce a certain percentage of electric vehicles. While China's progress on sustainable energy is impressive, there are also challenges that the country faces. One of the key challenges is the need to balance economic growth with environmental protection. In addition, there are concerns about the environmental impact of some of China's renewable energy projects, such as large-scale hydroelectric dams. In conclusion, China's lead on sustainable energy is a positive development for the country and the world. However, there are also challenges that the country must address as it continues to pursue sustainable energy, including the need to balance economic growth with environmental protection and to ensure that its renewable energy projects are environmentally sustainable. Catching up in semiconductor war. In recent years, China has made significant strides in catching up in the semiconductor industry, which has traditionally been dominated by companies in the Taiwan, United States, South Korea, and Japan. One of the key drivers of China's progress in this area has been the government's focus on developing the domestic semiconductor industry. The Chinese government has implemented a range of policies aimed at supporting the development of the semiconductor industry, including subsidies for companies, research funding, and tax incentives. In addition, the government has encouraged foreign companies to establish joint ventures with Chinese firms to share technology and expertise. As a result of these efforts, China has made significant progress in developing its domestic semiconductor industry. Chinese companies such as Huawei, SMIC, and Tsinghua Unigroup have become major players in the industry, and China has made significant investments in developing advanced chip manufacturing facilities. However, China still faces significant challenges in catching up in the semiconductor industry. One of the key challenges is the need for technical expertise and talent, which has traditionally been concentrated in other countries. In addition, there are concerns about intellectual property theft and other forms of unfair competition. In conclusion, China's progress in the semiconductor industry is a positive development for the country and for global innovation. However, there are also challenges that China must address as it continues to catch up in this area, including the need to develop technical expertise and talent and to address concerns about intellectual property theft and unfair competition. Conclusion of the video. In conclusion, China's economic policies and strategies have had both positive and negative impacts on the country's economy and the global economy. While the country has made significant progress in areas such as sustainable energy and semiconductor manufacturing, it has also faced challenges and criticisms in areas such as real estate regulations and tech sector crackdowns. The Chinese Communist Party must find a balance between addressing important issues and supporting economic growth, while also addressing concerns about intellectual property theft and unfair competition. As China continues to play an increasingly important role in the global economy, it will be important for the country to carefully consider the potential economic impacts of its policies and to work with other countries to promote global economic growth and stability.